It is great to have you back here at Coin Lady channel. I believe that the recently announced upgrades to the XRP ledger will really bring it into the modern era of blockchain technology. So let's talk about those and the future of the ledger. I see a lot of people getting scared before we even get to that. To what end is the cryptocurrency market declining? Why has the value of the coin I prefer dropped? Why is that happening? We may be living in a bit of a bubble here in crypto land from time to time, but the present decline in the market and other financial sectors is hardly shocking given the rapid escalation of the global conflict. Europe has been a focus of ours for a long time. At the moment this recording was made, however, news broke that Iran is launching waves of drones towards Israel. Soon, rockets will be seen here. I won't even try to guess where this is going because I'm not a geopolitical expert. That, however, seems like an additional risk to be taking. We were warned, but now it's happening fast. Greg Manarino says it's funny how these things happen after the financial markets close on weekends. It's pre-announced. So you can make of that what you will. Things don't seem to be improving enough to start preparing for a war expansion just yet. There will be a price to pay for that. In addition, we take a look at their economy, which is experiencing persistent inflation. Therefore, the Federal Reserve will maintain its current policy of monetary tightening. At the beginning of the year, we anticipated a number of rate cuts, 5 or 6, but now we're looking at higher rates for a longer period of time. Eventually, the US government, businesses, and households will have to give in to the overwhelming amount of debt that they are carrying. Although these rates may not be terrible in the long run, they are clearly not going to be able to handle the current level of debt. And that's a completely separate issue. My fear is that problems will arise in banking and commercial real estate in particular the longer we remain in this restrictive policy. However, it has only limited those two sectors. However, this is merely yet another instance of heightened danger. The value of assets as a whole has been steadily increasing for some time. Just take a look at the S&P 500 or the cryptocurrency market. Now that these dangers aren't going away and are actually becoming worse, people need to get real about how this is going to unfold. I want to stress that I am not an authority on international affairs. I have no idea what's going to happen since I'm not a financial expert. No one should be surprised, though. Market volatility is par for the course. Cryptos have taken a beating recently, and given where we are in the cycle, the next downturn could be devastating. Regardless, I'm going to seize this opportunity to hunt for value, particularly among those heavy hitters, and try to fill my last bag. Now, it's all right with me if the market doesn't return my entire investment. This is not the end of the world, but keep in mind that many opportunities arise during bull runs, and that you typically have more opportunities than cash on hand. Once again, I'm on the hunt for reliable crypto assets and good deals. As we approach the second half of this year, I'm assuming that the SEC is trying to slow us down by approving Bitcoin ETFs and likely more in the future. We might even discuss the possibility that Ripple, PayPal, and other companies will issue stable coins. No matter how bad things get, maybe we just come charging out of here. I still don't think we're very far away from seeing stablecoin regulations as the first step in digital asset regulations in the US, and I expect that this trend will continue as we move towards more reasonable and sensible frameworks. I am still targeting the fourth quarter of this year, and intend to use the following year as a launching pad for the adoption and growth of crypto assets, as well as for financial gain. If the prices of FLR drop enough, I will be satisfied with what I have focused on during the second layer of the market. Memes aren't my thing, but layer 1 smart contracts, blockchains, and maybe even more AI in our workplace might be fun. Despite my belief that gaming will be massive, I am not very knowledgeable about it. If you have any recommendations, please share them with me below. I'm really flexible. The XRP ledger, a new lending protocol proposal was announced by a vet. Let's talk about it now. This is monumental, because XRP places you squarely in the middle of Bitcoin, which is, at its core, a pure currency. Next, there's Ethereum, where you're free to code to your heart's content. Our abilities are different. Do you know what Ethereum does? Because you can do a lot. Lending to the XRP ledger is also a huge deal. The proposal presents XRP, ledger, and the native London protocol. This is significant and innovative, because it is built into the XRP ledger's foundational layer. We can see that it has 3 distinct parts, and that it is not something we are just slapping on. It continues by saying that this won't happen overnight, because it's a big proposal with lots of details that will digest over time. We weren't asking, is it done yet? So stop being a brat. Is everything all set? It's going to be a while. Lending is coming to the XRP ledger, he adds, and that will further expand the goal of full DeFi capabilities. This is fascinating information. Additionally, DeFi will supply liquidity on the chain, the most crucial guide that we can use for payments and other things. Institutions and all the use cases that Ripple is developing will be attracted to it, in my opinion. The more liquidity there is, the better, but retail users also take a look. Our liquidity is on par with that of institutions, and our magical tokens spend just as well. Looking at the current state of affairs, it is ideal for updates, expansion, and exciting features to be released during the expansion cycle of crypto growth. What we are going to witness is a modular build-out, with the core functionality needed directly on the ledger baked into XRP and Ledger, as well as the expansion with side chains and existing chains. This will greatly enhance the blockchain's long-term potential to be a serious contender. We manage settlements, payments, and a lot of the DeFi functionality, and that bridging technology allows us to leverage a smart contract blockchain to do the heavy computation over there. Amazing bridging is massive. AM is enabling us to build up liquidity, and it would be massive if we could feed data on-chain and leverage data from Flare as well. They can still ramp up, get liquidity, and attract investors when they're trying to launch a project, but aren't quite ready to be listed on an exchange. That, in my opinion, is going to be crucial. An important step forward for blockchain technology, the DAX was the pioneering exchange of its type. However, it was not feasible unless both the buyer and the seller were present simultaneously. Therefore, I believe that AML will have a significant impact on chain liquidity and developers' capacity to initiate and complete projects. This ecosystem is, in my opinion, running like clockwork. If you take a step back and think about it, XRP's fast transaction times, low transaction fees, and excellent payment capabilities are the features we want to keep. However, in order to compete with them, we require additional capabilities. They are absolutely crushing it, and we're here to bridge the gap. It is absolutely critical to feed data into Oracle. Look at developments and think, that's interesting, but it's missing some pieces to really be useful. That was the case in the past. As a result, you will be perplexed. This is a new and fascinating setting, and I believe it will be crucial for XRP to play a significant role in the future of digital finance. Someone recently asked me, what is the SEC trying to do, after I mentioned that I would discuss the subject. Can you tell me what their goal is? Just because they are losing so many court cases. They are not winning many games, which makes me wonder what the point is, and they are moving at the slowest pace. I'm at a loss for words. For the most part, they won't do it if the items up for trade aren't securities. Like Ripple, they may receive coin for certain violations and fines and penalties, but that won't prevent anything. Since there doesn't seem to be a coherent strategy or plan here, I get the impression that they are merely attempting to put the brakes on, claiming that Congress will write rules, and that they will be required to follow them regardless. Based on my understanding, All it does is flood the market with litigation, discouraging anyone from attempting to use this technology, invest in it, or use their clients' money to do so. It wasn't until they were sued that they had to admit defeat on the Bitcoin front. If that hadn't been the case, they would have likely dragged their feet on that too. My guess is that slowing down this industry is as easy as that. The use of decentralized exchanges, of which CEU is the most prominent, is on the rise, and you should seize any opportunity to rebel against this trend. Here I could be completely mistaken, but it's possible that major players like Kraken, Ripple, Uniswap, and Coinbase will come to an agreement to bring the space into compliance. That would be very reasonable, but I don't think it will happen anytime soon. I believe that Elizabeth Warren wants crypto to be slowed down as much as possible, and Gary Gensler just follows her lead. Nothing can stop it. It will persist. In due time, fortune will smile upon us. However, if they are able to halt or significantly reduce the rate of progress, they will be going to exert every effort possible. We're facing that challenge head-on. Gary Gensler's tenure is temporary. Time is on our side, and we will win. You can't halt progress, and Elizabeth Warren, I hope she doesn't stay for another term. The video ends there. As always, I'd appreciate it if you could subscribe and leave a comment with your opinions. Muchas gracias, depart.